Hey everyone, me Kevin here. I own 2,387 shares of Tesla. And today, Tesla announced a 5-1 stock split. And so this brings up the question, is now the time to buy Tesla or is it time to sell? Here's my breakdown. First, Tesla's stock split will go into effect on August 31st. This is 3 days after Apple's stock split, which is scheduled for August 28th. For Tesla, for every 1 share of Tesla you have, you will end up getting 5. So for me, instead of having 2,387 shares of Tesla, I will now have 11,935 shares of Tesla on August 31st, which honestly sounds quite ridiculous. But it also means the price of each share is going to get divided by 5. So that means a $1,500 Tesla share will actually end up selling for about $300. So basically, nothing happens. And with fractional shares, it kind of leaves us wondering, like, well, why would they do a stock split anyway? Like, what's the point? Well, the interesting thing is when we analyzed Apple's stock split after they announced earnings, we discussed the psychology of Apple's stock split. When a company splits its stock, it makes its share price look more accessible. It makes the company feel more relatable to the average everyday investor, and therefore also more relatable and attainable to the average everyday consumer, which is actually a way a company can help brand itself as always being accessible. Whether it's our stock on Robinhood or it's our products in our store, we want something for everyone. That's exactly why Apple has an inexpensive iPhone C. That's exactly why Tesla has a base model Model 3. And rather than just catering to the higher end, companies are trying to cater to the middle and lower end to attract more consumers and be accessible to more people. In terms of a stock split, this now creates free advertising. And Tesla is famous for its lack of advertising. I mean, after all, people flock to Tesla because they love Tesla, they love the brand, they love what it stands for, zero emissions, a cleaner future, renewable energies, and of course, self-driving technology. But what does it actually mean for the stock? Well, in the short term, usually not much. In after hours, Tesla stock did go up about 6%. And this is usually referred to as stock split hype. But keep in mind that stock split hype doesn't usually tend to last. Nothing has fundamentally changed at Tesla. So if we want to talk fundamentals, then I guess we should probably talk fundamentals. So how do we figure out what the value of Tesla is? Is Tesla worth $1,500 per share, aka $300 per share post-stock split? Well, here's an easy way to determine just that. Let's start with something a little bit easier to do. Let's try to think of how many cars and Cybertrucks Tesla could sell by 2024. I strongly believe in the number that I'm going to tell you, but let's think about it. Right now, Tesla is delivering somewhere around 500,000 cars per year, and Tesla expects to ramp this up to 1 million cars per year soon. And once they get their 4th Gigafactory online, Tesla could be selling 2 million cars by the time they get all of their Gigafactories up to speed. That's because Tesla is expecting to produce 500,000 cars in their Fremont facility in California. Eventually, they can produce 500,000 cars in Shanghai, China. Then they're building a massive Gigafactory in Berlin, Germany. And they're building another one in Texas to produce the Cybertruck and the Tesla semi-truck. If all of these Gigafactories together can output 2 million cars per year by the end of 2022, that gives us 2.5 years to actually get to that target, then it might be realistic to assume Tesla could generate 3 million car sales by 2024. That's another 2 years later. So let's go with 3 million cars. Now remember, there's an asterisk on this, right? This is really guessing, but we're trying to make an educated guess. Because right now they produce 500,000 cars out of 2 gigafactories that aren't even at full capacity yet. And so if we give them 2.5 years and say 2 million, and we give them another 2 years and say 3 million, that sounds reasonable, especially if each gigafactory can produce about 500,000 cars. Well, let's do some quick math. If Tesla sells 3 million cars in 2024, and each car generates $50,000 of revenue for Tesla, then that creates $150 billion in revenue. That's like money coming in. That sounds good. And Tesla's current profit per vehicle, including credits, is somewhere around 26.5%. Okay, well that's easy. times 26.5%, which, by the way, Elon Musk expects that number to approach 30%, but let's stick with 26.5% and stay a little bit more on the conservative side, and that is what they're hitting now. That brings us to a profit of about $39.75 billion in profit. Now, we got to take out some research and development fees and some administration fees. They don't have a lot of advertising fees, but their overall operation expenses after they produce the cars tend to be around 15% of the company's revenue. That could end up declining. That could go down to 10%, who knows? But let's stick with 15%. We don't want to change too many variables. So let's take out another 15%, and now we're left with about $13.6 billion in profits by 2024. If we now take those earnings and multiply them by 40, divided by how many shares there are, we would find that Tesla might be worth, instead of $1,500 per share, somewhere around $2,940 per share, or about double what their stock price is today. But wait a minute, we actually have to add in a few things. I forgot a few things. We got to put in a valuation for Tesla Solar. Lowest cost solar available right now. Tesla batteries from their solar division, selling more than ever. Tesla insurance, which they tend to have much higher profit margins because Teslas crash way less and cause less damage when they do crash. Tesla semis, Tesla autonomy, which they might license in the future. Let's just call all that stuff the icing on the cake. Like literally all the stuff I just mentioned, let's just put that together and give it zero value and just call it the icing on the cake. So in other words, if I invest $1,500 in Tesla today and I get one share, which by August 31st will be 5 shares, but it'll be divided in price. It'll still be $1,500 in Tesla. And let's say Tesla achieves this 3 million vehicle production target, and we do hit that stock price of $2,940 by the end of 2024. That works out to a 13.6% return on my money over the next 4 years. Plus the potential growth of all that icing, you never know. So there are a few things that can happen here. We could be right, and that number could happen. Or everybody could start hating Tesla, and Nikola could take over the world with hydrogen cars, and Tesla's gonna go bankrupt. Or I'll be really wrong, and Tesla's stock price will actually be a lot higher because Tesla insurance will take off, solar will take off, and all the other products will take off. And so I guess as a dude on YouTube who's definitely not providing any financial advice and is just highly recommending that you get 2 free stocks with Webull when you deposit $100 and sign up for life insurance in the link down below, let me put it this way. When I think about Tesla and the bottom line of Tesla, I have 2,387 shares today. My goal is to hit 2,500 by August 31st. That way, when the split happens, I've got an even 12,500 shares. And that's my POV on Tesla. If you like this breakdown on what I think about Tesla, make sure to consider subscribing to the channel. I have a stock playlist where all I do is talk about stocks in that stock playlist. Gee, imagine that. And folks, thank you so much for watching. We'll see you next time. If you liked the video, make sure to share it as well. Thanks, bye.